Excuse me. I should get out my screens for this next time and put these on multiple windows. All right.
Test,
All
test,
right.
test, test.
Can everyone see the stream and hear us? Or anyone? One confirmation is means we're good on our end.
I can hear it. I've just had to listen back to it myself, so I think
Okay,
we're all good.
perfect. All right. Yeah. Good afternoon or morning. Late evening for me and evening for Lemons. Nice. Um,
Yeah.
I'm thinking we're gonna go ahead and get started here soon. No time like the present, and the market's about to open. I'm gonna go ahead and start with disclaimers, and then I'll throw up the charts. First of all, none of this is financial advice. This is for education and entertainment purposes only. Always do your own due diligence. Trading is a high risk activity. You can and will incur losses, so use proper risk management and only risk capital on systems you've tested yourself. That being said, thanks for coming, and I hope you pick up some knowledge from this. I'm gonna go and throw up the chart. Um,
Hey, there we are.
hey, how's it going, everybody?
Look at
This is
us. Oh, it looks like I've got a bit of a tan going on today.
oh, I have been tanning in this freezing weather. No, no, just kidding. It's no
Up
sun
in
here.
Alaska?
Yeah, there's zero sun here.
Yeah, we've just switched into summer down here, and I don't know. The weather gods decided, nah, you don't want summer just yet.
It's
We're
just
gonna give you a whole bunch of downpour. You're gonna have some spring again. Let's just give you a whole bunch of rain, which is great.
that sounds like here every year. We have like three seasons: winter, rain, and 2 weeks of sunshine, and that's like Alaskan weather. It's so
We
great.
can get four seasons all in one day in Melbourne.
Oh, that's
I remember
crazy.
the first time my wife and I went on a date. We went up to a place called the Eureka Tower, which was at that point the highest tower in Melbourne. Beautiful, beautiful sunny day. Put on the shorts, t-shirts, and thongs, which are flip-flops or jandals, or I don't know what you'd call them over in America.
Hmm.
Sandals
Yeah, flip-flop
and
sandals.
flip-flop sandals.
Hmm.
And yeah, went up there and we were at the top, beautiful blue sky, and we were about to leave and we just saw the hint of a cloud. And by the time we got back down the bottom, it was chucking it down. It was torrential rain, and then we got on a tram. And when we were on the tram, it hailed, snowed a little bit, and then by the time we got off the tram, about 30 minutes later, it was beautiful sunshine again. So
Nice.
that's
That's
Melbourne
interesting.
weather in a
Yeah,
nutshell. Yeah,
that's
gotta love
crazy.
it.
Yeah, yeah. Literally never experienced weather like that, so that's interesting and cool to me. Um,
Oh, it is. It's pretty cool. Yeah, the cool change is always a fun thing to see as well. But
yeah, yeah.
how's your trading been going this week?
I this
Have
week
you
I
traded
haven't.
this week?
Nope, I haven't traded at all this week. Last week was pretty successful. I think I showed it off at the end of the week. We had a few wins. Um, I am just now getting in the charts, and because I missed out on there was a potential win today, on Nasdaq with uh the Asian range breakout, but I didn't get in that. I was busy today. As of right now, I'm looking at GU because we're going into London. So I kind of during London session, I kind of flip back to just looking at the total overall market and liquidity. It's a session I like to be active in. So on the 4 hour chart right here, we're kind of switching bullish. Right, it's still a bearish market, but we could be pulling back or coming up to supply to come down. It's kind of like I don't know what's going on, but right now we're bullish, right, currently. So just in line with that on the 15-minute, I like to look for strong liquidity. We literally just had a strong liquidity sweep right here, in line with that bullish momentum, and flipped and closed. So as of right now, on the 15-minute, it's kind of triggering bullish price action. So this means that just with that information alone, in line with the 4-hour leg and the 15-minute liquidity and overall market, it is more likely that this area will hold than this area will hold, is the idea behind that. It doesn't necessarily mean, I mean, the thing you also have to watch out for is this. Uh, and as you can see, I'm not in any kind of trade. I'm not calling out any kind of trade because look at all of this liquidity you have to be aware of.
So much space down there, isn't it?
Yep. And like I'm not as an impatient trader. So even though all of the rules technically are in place right here, we're really close right as London is opening, and it's kind of early in the week. It's right the second day of the week, and with all of this liquidity resting right under here, and it's right next to it. And if I was a market maker, it would cost me very little, and in fact save me a ton of money to push the market and liquidate all of that to continue if I wanted a bullish trend. So I am aware of that. So even though this is
Yeah,
currently
there's got to
bullish,
be so much liquidity sitting
yeah,
under there,
yeah,
and the start of the move as well. After that first initial pullback and then push up, there's a whole bunch of liquidity sitting under there as well.
yep. So I'm more
Um,
looking for it to come down into this wick, probably, if I'm real honest. Like most, not guaranteed, but look, it's in line with a fib move. It has potential liquidity. It's resting liquidity above it that we were just looking at, all that liquidity right there. It is a primo zone. We can zoom in and look at it on the 15-minute chart and take a look at what that looks like. That is a huge amount of demand. It already grabbed liquidity and filled this deep demand. And it has another set of resting liquidity even lower than all this stuff right here, which this alone might hold. It might absorb this liquidity right here and hold. So that's something to be aware of. When this gets liquidated, I'm going to be aware of this. But as of right now, I would not be surprised if it even liquidates that and comes down into this zone and flips. That is a serious trigger for me. If it flips after liquidating this or this, that's way more likely to come up and take this kind of double top-ish liquidity sweep. That's a pretty violent liquidity sweep though, and we are in an overall bearish trend. I like to see liquidity swept before a trend continues or reverses, and that hasn't. I mean, it kind of happened right here, but that wasn't strong liquidity, right? Because that would have to, at the time, or even this didn't really create a new low, so it wasn't strong liquidity. So just keeping that in mind. That's what I'm looking at in the market right now.
yeah,
Do you have anything to
it,
add? We can.
it being it being a Tuesday, I do have a short question for you.
Hmm.
How so you know how you know when I first started learning, like you'd have these people that say, I only trade Tuesday, Wednesday, Thursdays.
Hmm.
Do you sort of look at the price on any given day? So, for instance, I've been sort of relearning the sort of weekly profiles that ICT teaches, and with the Tuesday low or high of the week being like a common thing. Do you do you take much stock in that sort of thought process?
Um, yeah, I look at it a little broader than that. I kind of look at things in like a weekly cycle. So basically, I'm comfortable with the market moving in a direction, and the kind of liquidity I'm looking for happens to naturally line up with daily highs and lows already. So I don't have to really filter for individual days like that particularly. But in the beginning of the week, I expect the market to move in a direction, usually absorbing liquidity from the end of the last week, and then midweek, right before Wednesday, I expect the start of a rollover sometimes, and then it might roll the other
Yeah.
way. Uh, and I do keep that in mind. So it's kind of like a wave of the week, and you can always throw up a weekly chart and just kind of look at where it is on the last like weekly candle, basically like range. Like right now, like I gotta
Yeah.
zoom way in for this. So we just hit the top of last week, right? So we have all this range to fill. That's possible, and
Hmm.
or um this range to fill if we're going to be bullish. And I do kind of think about things like that. But with Forex, there's a weekly cycle. And so, yeah, I guess the long and short of it is I do look at the day and how the day reacts and the highs and lows. But because my strategy already incorporates daily highs and lows as their extreme points of liquidity most of the time. It's more the total week and what how far into the week is it kind of more than
Yeah, yeah.
yeah. But yeah, definitely I do take
I,
stock and stuff like that. I think it's um time and price are the most important pieces of trading. So yeah, I do take stock
yeah.
and things like that.
I did, first started learning when I did all started trading into the daily cycle, and sort of the weekly cycle is kind of that next, the price is fractal, the next sort of fractal up, I suppose. If you're getting on a Tuesday and the daily cycle, for instance, an Asia low has just been taken out by the London, and we're at our Tuesday weekly low or something like that, then that's something that I have been starting to uh, look at, and possibly being able to, in a position of holding trades a little bit longer. But I haven't transferred that into actual trading just yet. It's just hypothetical just yet. So I just wanted your opinion.
Gotcha. Yeah, yeah. That
But
makes
it is
sense.
quite interesting, going through and having a look at, you look at the weekly candles and you go, oh, when did that wick form? Oh, look, it was a Tuesday. Oh,
Mm-hmm.
look, it was a Tuesday.
Yeah, okay, okay.
It happens. It happens quite often.
That makes a lot
But
of sense. Yeah.
yeah, yeah.
That's yeah, interesting. Yeah, I've never, I guess no, I've never boiled it down like that, individual days and stuff. But I do,
Yeah,
yeah, I think it's very valid. I do think the
yeah.
bigger the institution and the bigger the money forming, the more macro they have to position themselves. So things like that, like entire days of cycles and um, session cycles and weekly moves and stuff, are the kind of things that the biggest money is moving around in. So I do think it's important.
I imagine you wouldn't have seen the video I did maybe a few months ago on gold. I got AI to look at um, what, because I went up even another fractal and went up to the monthly candle, and it is a very high probability that the entire month, the high or low, usually it was the low, because gold is always kind of going up and up and up and up, but
Mm,
in the first 5 days, the high or low of the month is already set with a pretty high probability. I don't have the numbers up in front of me, but because I'm just going off the top of my head just now, but it's pretty crazy.
so
And
wait,
then
what is?
same thing again with when you go down to a the weekly cycle. Um, when it comes to gold, the high or low of the week, by the time you get to London on the Monday, there is a 80% plus certainty that the high and low of the week has already been
Created?
captured, already been
Oh,
already
oh,
been already made. It's pretty crazy.
that's cool. Yeah,
I don't trade gold,
interesting.
so
Yeah, no, I
but
also don't trade gold. I mean,
yeah.
uh, yeah, I did.
Position trading is a different thing, but
Yeah, yeah, I did. Yeah, I dabbled in all that. I'm out of. I'm currently out of everything that's at a euphoric level right now, though. If I'm honest, like I am not. I'm not holding any gold positions now. And
no.
nope. And I just recently. Well, I don't want to talk too much about. I don't want to give people ideas what I'm doing because I mean the market can get euphoric for a long time. But there's been a couple euphoric stocks and stuff that I've made enough profits on that are tangible in my life that I've put to work in other ways, and I'm happy with that, even though I know I can be giving up certain gains because of the levels I got in. Like, for example, gold, I was accumulating at like 16, 1800 range and stuff like that for a long time.
Yeah,
So I,
beautiful. Yeah,
yeah, things like that. I'm a
you can
very
be happy with
patient.
that.
Yeah, yeah. I'm a
What's that?
very
A
patient.
3x sort of at the moment?
Yeah, yeah. Plus, I mean, once I learned how to use leverage and stuff like that, I'll have leverage positions and things like that. Very small leverage,
Nice.
like times two and things like that, depending on my count. Like I was talking about it on a previous live one time, I exited a huge amount of position of Bitcoin at 100K because that was I promised myself my original analysis when I was getting in at 18, 20K and stuff like that. I was like, okay, when it hits 100K because after that's unknown. I know there's plenty of room for 1 million and 2 million in the future, but I'm waiting for new cycles and things like that. So I got a huge amount. I have
Yeah.
a permanent hold on some forever, but and I do things like that. I'm very like I try to be as tactical for my investments as I am with my trading, and it's paid me well. And yes, I've missed out on some crazy gains, like uh trying to think of a big example because nowadays I'm really patient about how I exit, but I've exited positions way early, like way too early. Like I don't know. We could talk about that another time, I guess, if we're getting into investment type stuff. But um, yeah, positions.
It is interesting because like when you said like you always told yourself like I'm gonna get out 100K,
Mm,
like when had you made that analysis, and like was that
uh,
fairly early on in your
that was actually done as I was learning to successfully trade. It was when I first started like passing the prop firms and stuff, and that was the time that the crypto market was crashing. So I was getting in as an
yeah
investor instead of a trader. So instead of looking, because there was no left to look at, no, it had never touched 100K before, I had no area to do it. But I knew every crypto bro in the world is holding it to that level, and therefore, when enough investors are in, when enough investors are in to push the market up and bring it to that level, that's where price is going to start. That's going to be the I told myself that I knew that was gonna be a base value one day. Like one day, and I tried to tell my friends too. Like, dude, $16,000 is not a base value for what crypto is based on its adoption rate alone. I'm looking at no other numbers but its adoption rate. Um, I felt like 100,000 would be a good new base rate because that was a number that every crypto bro in the world had like psychologically already at their level. So they agreed at that price before even getting into crypto, and that's how prices work. If you guys
yeah
don't understand, prices work when people agree on the price. So if the corporations can get you to pay $100,000 for a piece of Bitcoin, and you as a crypto bro already agree that it's worth that much, they will eventually bring the price up to that level if it's popular, if they can make sales on it and transact with it. So for anyone out there that's a crypto bro, you guys already self-prophesied that, and because I understood trading already at this point when crypto was crashing, I had made that decision on that analysis alone. That one day that's going to be the baseline. So because I'm getting in so early, and that was like a more than 5x gain, and I used leverage, like I leveraged my way in a lot, and used things like
mm,
what's it called staking and things like that, and different kinds of like interest dealings and GLP tokens and stuff like that that build interest. I had all these different avenues of growth as well
yeah
as
yeah
investing. So the amount of real USD cash that I made when it got to 100,000 was a level that it would have been. I feel like even though I do believe in Bitcoin, and like I said, I still hold some Bitcoin. I think Bitcoin could easily go to 1 million, but not like that's a far future thing. You know what I mean? Like there's gonna be waves. I could see it drop by 40, 50, 70% a few times on the way there. Um,
hmm
many times maybe. And it would have been folly of me to take the risk. I was no longer risking whatever I initially invested at this point. I was risking a huge amount of unrealized gains, uh, and I felt it would have been disingenuous to myself to risk that when that was the plan, and I let my family know, and it was already a set in stone thing, basically. So it was more
yeah
um, a combo of analysis and like moral backbone because it was hard. I mean, I think crypto is still gonna. We're in a bull market, so I don't think the bull market's done yet. So I do think I made an early call by liquidating the amount that I did of not just Bitcoin but a lot of my crypto. Um, but and I can position back in. I still position back in sometimes and things like that. But I think I made the right call all in all. I do think I made like analysis wise, if that makes
yeah
sense to everyone. Yeah. Sorry,
yeah
I don't beat
I
that dead horse too much.
yeah no I watched the video, and very quickly before you get back because I think GU might be sort of getting into a decent place. um there is a There was a video that I watched just this week about Bitcoin, about having a certain amount of days before it reached its absolute peak, and then another certain foot before it completely reset and started a new peak. And it's been exactly the same
Hmm.
for the last three cycles. And it's just this the last week or so just finished its absolute it's like maximum number of days that it had been um, for its kind of getting to its new peak. So
No.
we might be seeing some downward movement.
Yeah, yeah,
Obviously, this is just a video, and video that I found off the internet. I mean, they brought up the data and all that sort of stuff, and so you
yeah.
can't
Okay,
believe everything on the
let's.
internet.
How about this? We instead of looking at it through all our dumb feelings about it, let's take a look at it through the way I look at price action and see how we're looking at Bitcoin. All right, we're gonna go up to the highest time frame where the trend is. Okay, on the weekly, we're uptrending. We're down into, let me mark up this zone for right now. We're in a deep demand zone right now. We're literally in the most deep demand zone on the weekly. On the daily time frame, we are downtrending. We have had a strong sweep. We've had a strong sweep right there. And from that sweep, we have not, well, I guess you could just count the point of liquidation actually, right? Yeah, right here. So we have closed above the point of liquidation, and we filled the order zone in that where you'd like continue that. So technically, we're at the earliest possible sign that we could be at near the end of a pullback, but not necessarily the end. I mean, there's lots of consolidation stuff that can happen, and also all this range right here, and it can liquidate this zone. All of those things are possible.
Yeah,
But just as of right now, on the daily time frame, we're kind of like signs of the end of a pullback. On the 4 hour chart, we almost created our strong liquidity right here. So basically, here's what I would honestly look for from a technical analysis standpoint is a liquidation of this point at some point. When that liquidation happens of this point, if the market turns around, it is the earliest possible sign of a bullish continuation. And if that bullish continuation is true of
yeah.
here, and you look at the higher time frame, and therefore it's continuing on here to test supply, well, what's it doing on the higher time frame? Filling up demand. Well, then there's a supply at the test. So technically, if all the conditions are lining up, it's possible that when that liquidation happens, it could be
I mean,
bullish
all you
again.
have to do is like look left to look at sort of the previous moves up and what
Yeah,
exactly it has it done just before, and it's pretty. I don't know, like Bitcoin looks pretty
cyclical.
obvious at at
Yeah,
certain
yeah,
times.
yeah, yeah,
So
yeah,
just I mean, just looking at that last move up, for instance, that it liquidated and moved up.
yeah. As a matter of fact, yeah, look, you can, okay, let me take a path thing right here. Take a look at this.
G'day Pandora. G'day Pat. Hang in there, lemons. I assume you're talking about the weather, yeah. Catchy tune. Crypto trading seems to be mostly done on fundamentals. Um,
Huh.
I mean,
Funny, where does this line up with, guys? Huh, real interesting, huh?
oh, that's that is really interesting.
Not this is
That's a
none of
nice
this
little
is
pattern you've
financial
drawn there.
advice.
That's
Yeah, none of this is financial advice, or even like in no way, shape, or form do I know if any of this stuff is likely or possible. I'm just saying. Uh, right now, that's the only thing I have to go on.
hmm.
But yeah, anyway, does anyone have any questions before I'm gonna go back to GU real quick? Because like you said, GU is at a.
GU was looking, yeah. No, there was no question. It's just a statement from Catchy Tune um, about crypto trading being mostly done on fundamentals.
Uh, I think any trade, I think any trading can be done mostly on one or the other at all. I don't think
Yeah,
that's mutually exclusive to crypto, but I also think
yeah. I mean,
it could be done
Forex is
exclusively.
like you just sorry, mate.
No, go ahead.
Yeah, I was going to say Forex. You're just finding one currency that's growing in strength against one currency that's weakening in strength. I mean, it's all on fundamentals as well. I mean, same thing with indices.
Hmm.
It's just I suppose uh, sort of the technical analysis is just refining the entry and finding ways to get in safely.
I would say if I had to try to describe it, I would say that, okay, I hope I don't lose anyone on this analogy. I would say that trading fundamentals is like the
I'll rein you in if you do.
is like the soft sciences or the fields of study like history and psychology and things that can sometimes be arbitrary or reframed, right? From a perspective, whereas technical analysis is closer to the hard sciences in a way because you're looking at a piece of data that's written in a certain way on a chart on every it
Yeah.
should be as close as possible on every chart so that it can be replicated and um, neither one is better than the other in my opinion and that's funny coming from someone who has a physical sciences background. I think all sciences are important. So I think the same is true in trading. For example, when you're taking an entry on fundamentals alone, maybe you have a stop loss, but you don't have a specific number stop loss. You're like, if I lose, if the Dow or something drops by 2,000 points today, it tells me I'm wrong about, bullish sentiment hitting in the market today, so I'll get out. Whereas on technical entry, you'll be like, okay, I have a 30-point stop loss. If it hits that exact number, I'm out. And you have to do your risk management that way. And so one is kind of more a little bit more arbitrary in that way, but you'd be running it with a system in place where you have that in place where you're risking a certain amount. So you turn it, um, you kind of make it grounded. But that's the difference I'd say is one is kind of like closer to the soft sciences, one is the hard sciences. The technicals is a certain chart thing, and fundamentals is what is the world doing with this asset, and they're both equally
Yeah.
valuable. I hope that kind of makes sense to everyone.
No, man, you didn't. You didn't. I thought you were going to go much crazier than what you did. Like it was very understandable.
Cool. Do you have anything you want to look at right now? So sorry, I went back to GU and I'm showing. So as of right now, what's happening with
We're
GU?
both looking at the same thing at the moment, and we're just waiting for some sort of liquidity to be taken, and it
Yep,
doesn't appear
it is not
that
quite
that's
happening.
happened just yet.
I'm gonna zoom in and take a look at what. See how there's this demand right here, guys, and it like just pushed the market up, leaving all these orders. So as the market maker, I know that there's a lot of interest in this area. So there's potential buys that are missed, real money, enough money to move the market violently against all of these orders. So with all this setting liquidity, I know a bunch of people can place sell orders in this area. If I know there's a bunch of buys and a bunch of sells here, it would just be efficient for me to let the orders be filled in a way that brings the market right here so that all those buys can get
Hmm.
triggered without changing the trend or losing these big guys any money, your biggest clients money, right? And you're not, again, I know this kind of stuff sounds shady to new traders and they have like this really dirty taste in their mouth about market maker manipulation, but it's just they're liquidating the market for you to be involved in its movement. They're making the orders fill in an efficient manner to move the market quickly. Otherwise, the market would be molasses, okay? And you guys don't want that. You want it to be this game that you can
No one
join.
likes a molas.
Yeah. Yeah. No one, yep. Uh, exactly. No one likes a molasses. Um, yeah, I really want to see this liquidity get taken so bad.
G'day, Alex. Nice of you to join us.
Oh, nice. What up, man? I hope you're doing well.
Welcome, welcome. We're
That's
talking about molasses. How about you?
it's like we have royalty in the house. Yeah, did you want to
But yeah,
go ahead. Go ahead.
essentially, you look at this coming down, and you think that this is, it's taken off uh, a little bit of a lower high
Let me
here, but it really hasn't done very much at all.
let's
But
let's throw up your chart real quick and let him take a look at your
oh
perspective.
shit, let me just get my charts ready.
I have I have him. Yeah.
There we go. Well, I'll put up like if you as Alex is here, I can just get the whole entire zone right here and just call it some kind of weird zone here.
Get you up.
We'll call it the Australia zone.
Yeah, Australia. Love it.
Yeah. But yeah, you can see prices kind of come down here. It has taken out this high here, but it really hasn't done very much yet. And so, I don't know what you're looking for, but I'm looking for this kind of area. If I'm wanting to go up here, I'm wanting this area to get taken here
Exactly.
first,
Exactly what I'm looking for.
before I want to get in on anything, which may not happen. It may just take off. Unfortunately, I have still been just arbitrary. Like I haven't just to kind of pay attention. I have been keeping an eye on this kind of CBR box, drawing the sort of low high during this time and seeing how often uh, price does tend to gravitate towards that area, as we can see here. Went to the 1 standard deviation exactly yesterday, the day before. Actually went 2 standard deviations and then some, I reckon even 3 standard deviations that day. I did actually get in on a... No, this was just a markup. That wasn't a trade. That wasn't a trade. This was a trade that I actually took. Missed this one because it didn't drop down low enough. So again, just came through the Asia, the Australian zone here, and obviously came back up here, and I just got in on a retracement, which almost got me out, but took it to the negative
Do
0.25 extension, which is my usual extension. Um,
do you have a
Obviously, the
limit?
first trade was a limit. Yeah, this was about a limit on this one.
Got you.
Yeah. And just looking back at this, I'm just trying to think of, we're currently bullish. So yeah, this is correct. Usually when I'm going bullish with the overall trend, I will put my stop loss at the low, and if I'm going against the sort of general overall trend, I'd sort of just give it a little bit extra room. But we are, I mean, depend on how high you want to go up on your time frame, but yeah, um, we're we are bullish at the moment. Maybe on the monthly we're bearish, but yeah, like I've just been keeping an eye on this and seeing whether it sort of holds. I still haven't kind of really found, this was a loss over here because it took me out here. I still haven't really found a way in which I would adjust my trading to incorporate this. But as
Yeah.
you can see, it does kind of hold some value to the extensions, and this was the one I sent you when I first started researching. I was like, right, I've got to switch up my whole trading. This is obviously it. A nice little
Mm.
5.3 R
Mm-hmm.
going to the 2 standard deviations, but that's kind of a one in a million kind of perfect trading for me.
Yeah, I think it's
Um,
really valuable as like a supporting evidence if you already have a trade idea in place.
yeah, well, that's a pretty much mostly anything, isn't it? You can look at,
Fair,
if
yeah.
you look at any one tiny little thing, like if you were to, like, I can't think of any one little thing that you could just take that and trade off it.
Yeah, yeah,
You
yeah,
have to have some other kind of
yeah.
uh
What are you
some
talking
other
what are you
ideas
talking
as
about,
well to
man? Bullish
use.
candle, all in, bullish. Bullish candle, all in, bullish. Bearish
Yeah,
candle, all in, bearish.
engulfing candle,
Yep,
all in.
that's
That's
it.
it.
That's it.
Well, back in the day, I used to trade off. Let's see if I can find a decent. Let's take all these off. Let's just go to another random that doesn't have my thing up. I would do my support and resistance as well, but I would also kind of go, hey, look, it's we got a. Let's see if I can find anything. There we go. Another nice little pizza going on right over here. You can trade off pizzas, can't you?
Oh yeah.
Where's the turning? Where's the turn? There it is. It's got to hit. It's got to hit every single pepperami,
Oh,
as
look
you
at
can
that.
see. There you
Look at
go.
look at that.
Perfect pizza formation right there. Came
Perfect.
back and retested pizza and then dropped. You know,
That's
that's a
great.
great way to trade.
Awesome. It's epic.
Bear used to love me trading like that.
That's
He's like,
great.
people put a lot of emphasis on price patterns, and you're just making a mockery of them. I'm like, oh, I'm not making a mockery of them. I'm just adding a new one.
Right?
Head and shoulders. No, it's
Pizza
not a head
slice.
and shoulders. It's a ghost pattern.
Right?
It's a
It
pizza
goes
slice.
it goes pattern. I love that. It is about
You know,
it's like getting ready to test some liquidity up there. So we'll see
yep,
where it's gonna send it. I really want it to liquidate those lows right there.
yeah. Damn right, Pandora knows what I'm talking about. And everyone knows that, when you have a pizza shave, generally where does the cheese go? It goes down. So where does price go? It goes down. Speaking of
Oh,
I speaking of bear, I constantly find that whenever I say, "Oh, I'm gonna do live trading," are you moving me about again?
I
Stop moving me.
I once again realized I put you right in the way of the logo, and I didn't realize it this whole time until now. Sorry.
Oh, that's all right. There you go. Beauty.
Perfect.
Yeah, there was an ongoing thing when I first joined TTF, is whenever bear had a live trading stream, price would not do very much.
Yeah,
Like,
yeah.
is if whenever you do a stream just dedicated to live trading, price
Price
just
won't
goes,
cooperate.
nah,
Yeah.
no, no live trading for you today. You're not
Mm-hmm.
allowed.
Mm-hmm. It doesn't
And
want.
I kind of feel that we're getting that today.
Yeah, it's looking pretty bare. But oh, no pun intended. Um, maybe a little pun intended. Uh,
Oh, Pat, if you're still here, did you ever have a watch on any of the fair value gap stuff? And if so, did it
mm-hmm.
make sense? Oh, that water went down the wrong way.
It'll take a second from the delay.
I know, I know. Not
More
yet.
for more
Oh,
for
okay.
them, or more for them to know.
Yeah, yeah, yeah. I mean,
Not yet. Okay.
fair value gaps are always an interesting thing because I really have. Let's go on to another. Because obviously you're going to get fair value gaps everywhere, and and what makes this fair value gap. But this fair value gap didn't seem to hold. But this fair value gap pulled back into here and things like that. Um, I tend to use fair value gaps as more of targets these days, and sort of momentum. Because obviously when you've got a fair value gap, you've got a fair bit of momentum, as you can see here. You've got nothing here, and you've got a little bit down here, but then price really uses a fair value gap and it goes above, one area, two areas here. And so that's kind of how I kind of use it now, just as kind of like, oh, I know that price is, wanting to get somewhere now. But generally, when you're thinking of fair value gaps, like for instance, uh, you can put it into kind of a premium and discount sort of area again. So, like for instance, if you're taking a fib here and you're treating this as discount and this is premium, if you're looking for fair value gaps for a bullish idea, you generally want to be taking them in the discount area. So, like for instance, you wouldn't be wanting to take a trade off this fair value gap, or I don't see any more.
Yeah.
But yeah, you generally want to be sort of looking sort of anywhere below sort of the 50% line, and then you just generally looking for sort of some sort of reaction to it. Either as soon as it gets into it or at the 50% mark. If it completely engulfs it, then generally that's not a great fair value gap you want to be looking for.
I'm the kind of trader that
Um,
thinks that if you like to have kind of chunkier rewards and you can be patient, then trading above a 50% retracement, above being like more than 50% is like what you should do, period. If you're like looking for more consistent, chunkier rewards.
as in for it to retrace further than
Yeah,
50%.
further than
Is that what
50%,
you're
just
saying?
in general.
Oh yeah,
Yeah.
absolutely.
Yeah.
Like I like taking a trade into that sort of OTE area. So as you can see here, like this area here, you've got like a big old five, like it's only on the 5 minute, but even if you look at this on the 15 minute, there's going to be a fair value gap there as well. It's
Yeah.
already slightly been pushed into, so that's kind of a little bit of a warning sign here as it's
And there's
mitigated this
a
here.
bit of a strong liquidation. I'd
But
say that's like a 5 minute.
yeah. But as I said, I think I said last week, like I'm a bit of I'm allergic to multiple pullbacks in my trades,
Mm-hmm.
so I try to tend to, which is why I have that OT area and that's my take profit there, because generally, more often than not, it will go, even when it kind of does a sweep, it'll tend to go to this negative 0.25, because a
Mm.
lot of people will take an extension of 0.33 or a 0.5, whereas I tend not to. I mean, I probably should. I'd certainly get a lot more risk to reward, and I don't think um, my
Probabilities
win
would drop.
percentage would drop too much.
Yeah.
But it's more of a mental thing. I
Yeah.
tend to find there's more pullbacks.
Yeah.
Um, but yeah,
And I'll
how
chop.
what do you?
Okay.
Yep.
I was gonna say I'll chop off rewards too to not like I don't use tools like that. I'll use obvious places of chart liquidity, and so if that's lower than where an extension would be, I'll take that.
Yeah. Well, I like I just like having the extension and the place where I put my stop losses. I have general rules for those, which are
Mm.
very like super mechanical.
Yeah. Yeah.
Just so it's just another thing that I just don't have to think about.
Yep.
You know, if
Totally
I'm
get it.
getting, like, say if I wanted to get into this trade, um, like for instance, if I was to get in here, or against, so I'd be going there and there. I can just set that up in no time at all, and
Mm.
then I don't have to watch the trade for the rest of the session.
Yeah. Yep. That makes sense.
Um, like whereas, having the like, I can be like I can do subjective. I can kind of go, oh yeah, maybe this high, maybe this high, or maybe this high. I could do that, and it would probably give me a little bit extra
Mm-hmm.
here and there. But I mean, just in my mind, it's just not worth my time just thinking about it. It's
Yeah.
just
Yeah.
like nice and easy, bish bash bosh.
Yeah. No, I totally get it. Makes sense, and it gives you
Yeah.
a completely mechanical exit strategy.
I'll wait this weekend, especially on market opening for Dow. You get some fair value gaps
Does it
on
always?
Dow.
He said, does it
On I
always?
thought you traded the DAX. Didn't you trade the DAX? Does it always bounce
No,
on
no,
the fair value gap?
I think that was the other user.
Oh, is it? Okay.
Yeah, I think. And then they said, does it always bounce on the fair value gap? Are you saying does the fair value gap, when filled, always reject and continue, like, when filling that bullish
What's
fair
the
value gap,
what's
does it
the
always,
what's the ticker for the Dow? Oh, right here. There you go.
does it always then continue bullish? No, definitely not. Not always. That would be crazy if there was a 100% probability of anything.
That would be
Because
lovely, wouldn't it?
because imagine okay, so imagine the answer to that was yes. Imagine if I said yes, it always bounces off a fair value gap. That means that from a logical train of thought, you could take a stop loss underneath that fair value gap and just have a huge amount of risk and just let it bounce a little bit and pull out of the market. Maybe a 1-1 or something like that. If it always happened, because you'd have a 100% probability of being successful getting in and out of a bullish move if that was the case. That is definitely not the case,
Yeah.
or I would probably be trading that.
Yeah. I mean, definitely there. I would say there's a higher probability in sort of the higher time frame fair value gaps that if you drop down into a low, you're able to get some form of let's see. So for instance, I am just cherry picking this, but like you can see here and here. Can you see any more? Like this, just choose this one for example. Like you wait for this, and is this premium discount? Uh, let's just go here. No, it's not quite. Oh no, it's splitting it, so that's technically okay. So like if you go into this and you're expecting some sort of reaction, this may not even be a winner. So maybe like say you ain't. Oh, this is disgusting. This color. But just we know that it's discount. Anyway, so you're waiting for. Okay, this is a big push down. You probably wait for this to kind of get liquidated some more, but it doesn't. But oh, there you go. Yeah, I mean you can mark out things like that on higher time frames, and you can expect some sort of reaction to
The
that. You know, the higher the time frame, the more uh, powerful these types of things. You know, it's not even just fair value gaps; it can be anything. You know, you've got your supply and demand zones that you talk about.
I was
Um,
I was gonna say treat
you
fair
know,
value gaps as if they are supply or demand zones. So if you think of them that way, the answer to the question is how do you know when they will bounce? You don't, but you line up as many supporting pieces of evidence as you can. Like, okay, here's a 50% retracement zone, and it's the deep demand of this trend, and it's a fair value gap, so on and so forth, right? It's the and with the fair value gap. That
yeah,
increases the probability. You're never going to hit 100%. If there's no, whatever 100% strategies exist out there are tight to people's chest. I've never heard of any of them. So, you're not going to get 100%, but
I
as
know
you
one.
line up more things that are supporting evidence, you will increase the probability that you're correct. And where you place your stop loss matters too, though. That's where testing is for, because you can be fully correct and have the wrong stop loss placement and lose. So you have
Yeah,
to test that.
I know 100% win rate strategy.
What is that?
It involves my cat.
Oh yeah, yes, yeah. His cat.
Yeah.
That's fair.
In the last 4 years, she's taken 3 trades and won all of them.
Nice, nice.
So yeah, she's uh she's amazing.
I have
Um,
a hundred
yeah,
percent win rate on opening point 0.1 lot sizes to test different things out. And so far, I've successfully closed them all in the blue.
congratulations, man.
Yeah,
You'll be able to afford some chicken McNuggets soon, I reckon.
right? Yeah, yeah. Maybe one.
Oh man, let's see what is has GU actually ever ended up doing anything?
It's coming really close to the liquidity points right now. I'm like having an eye on it. This
Nah, it's
zone
just
might just hold.
consolidating. This
Yeah,
is it. This is
yeah.
it. Like this is as soon as you say, right, I'm gonna do live trading this week, it's
This
gonna
is
go,
also
no, you ain't. Nah, no trading for you.
This is also the kind of trade I don't like being in because, okay, let's say I got it. So, see how it came down? It technically took that liquidity and flipped, and you get in on that bullish move, and now you're in this trade. It does not go in your direction and sits around and pauses. That's always, or not always, it's very
Yeah,
often a sign that the market is going to consolidate and take me out too. I'm gonna be part
yeah,
of the liquidity. So, this is a pretty
yeah.
bad sign for any bullish trade I'd be in anyway, so I'm
Well,
kind
because
of
that's the
glad.
whole that's the whole point. When you've got that sort of flip, that whole point of having that liquidity there is that when it
Mm-hmm.
gets taken, it should do something.
Yep. It should use
And
it.
yes, it did take out that kind of slightly lower, but I would still consider that probably more as internal sort of
And
just
so ask yourself, is it
markings.
building or using liquidity? Right now, it looks very strongly like
Yeah,
it's building liquidity.
yeah, and it's gonna take one side out eventually.
Yep.
Usually when it does this,
I'd love,
generally it's kind of one of those one side then the other. It's
yeah.
gonna go. We're gonna go this way. Now we're gonna go the other way.
And I'm totally accepting of whatever happens, but I would love it if it went bearish first. That would be great, because that's what
That would be nice.
yeah, that's what
That
I'm
would be
hoping for.
nice. Because I'm just trying to think. Let's.
UJ short, if 8-hour bearish fair value gap respected in 4 bar. Okay, let me take a look at that, and then I'll throw it up. UJ short.
Yeah, get up your screen. I'm just we're looking at the same thing anyway.
So he said 8-hour. If 8 hour bearish fair value gap is respected and 4 hour fib E. I'm confused. Are
Make
you?
sure you get your
So the
you
question.
get up your screen and I'll read out the question.
Okay, okay. I have my screen on USD JPY 8 hours, so I'm gonna go ahead and flip
Yeah,
over
but
to
you're
it.
not showing. You're still showing my
Yeah, yeah.
screen.
I'm flipping over to it right now. I just wanted to
So
let.
UJ short if 8 hour bearish fair value gap respected and 4 hour fib EU long. So he's saying basically, I think that the EU, because he's expecting EU to be long, and UJ is also looking bearish, and it's also in a bearish fair value gap, then that's what he's looking for essentially.
Okay.
Which is a good, yeah. I
I
mean,
I
generally
get
you
yeah.
want them to be opping, going opposite to each other.
Yeah. If EU is going bullish, then yeah, I definitely can see UJ going bearish. Agreed. Um, so what I'm looking at, he said 4 hour fib.
4 hour fib on the,
Is it that? Is that what
yeah.
we're looking at?
No, I think he's getting a little bit closer, but I mean that's a a valid fib right there. But I think he's thinking on a smaller move, so maybe you might be dropping down into 15 minute, maybe Pat.
Are we talking this right here? Oh no, my mouse. Uh-oh. My mouse is deciding to be weird. It does this every once in a while. Sorry, guys.
It's got a mind of its own.
Yeah. Are we talking this?
Let me try and get it myself. Let's see what he's.
Um, but okay, so you're asking basically if this is true. If your analysis is correct and it's respecting a fib and going bullish, then is it valid to short USD JPY? In a way, yes. I think without extra analysis, it's confluence. It's added evidence for sure. Definitely strong added evidence too, because that means that USD is going down in comparison to euros. So, um, y yes, I do think it needs some level of analysis though. And you said bearish fair value gap. I don't know. Are you talking about this right here? This if
Yeah,
I
the
come
8 hour.
I think that is a lot. I don't know. I haven't tested that, but I think that's a lot of trust in a potential bullish move on a different market and it catching that move at the exact same time where orders will be filled in this zone. And that's a lot of connection. And it's two different time frames too. It's 8 hour and 4 hour. So I don't know. I don't know if I trust that exact connection, like specifically correlated, like right when it fills up that liquidity on the 4 hour and starts going bullish, then it's going to catch us and go bearish. I don't know if I would say that, but it is likely, yes, that this supply area could hold if that demand area holds and take it down. Yes, I just don't. I wouldn't know specifically if it would do it at the fair value gap because it is pretty darn close for me to call that, honestly, especially with how it's moving and compared to this. Yes, this could be going bullish right here. It could easily. But that does not mean this is going to go bearish right away. It could come up in here and then go bearish. We'll see. I just don't know the answer to that. Last
Yeah,
4 hour
it's.
consolidation zone.
I mean, it's. It feels like the UJ has pulled back quite a lot. I mean, we'll see. I mean, we've still got another five. Like, if you're trading on the 8 hour, you've still got another five hours before that 8 hour candle's finished as well.
Yeah, that's true. Why, just out of curiosity, why 8 hour entry position and 4 hour fib analysis? Why is your fib analysis smaller than your entry position, if you don't mind? Just out of curiosity, it seems. Um, I don't know. I've never
Last
heard of.
4 hour consolidation zone got it. Thanks.
I don't know. Okay.
Not
Well,
sure I understand that.
if you do want to say why your entry is 8 hour and your fib is the 4 hour, I'm just curious. But I'm gonna go back over to G real quick because I don't want to miss out on potential, even though I do think,
On more consolidation.
yeah, I don't want to miss out on more consolidation. Which, oh yeah, yeah. This is just massive supporting evidence for what we're talking about though.
This is
Building
this is why we
liquidity.
needed. Oh, did you talk about your NAS potential today?
I didn't. I'll throw it up over here. There was. I
Check
did
out
mention it. I
because
mentioned it.
NAS is done three sweeps of liquidity, is now heading to the bull side.
I forgot what it is. I don't know. I'm just gonna do FX. It's fine. It's all the same.
NAS 100, yeah.
Um. So today I didn't get it, but earlier today, there was a the interest I've been doing lately. We have. I'm just gonna quickly. I don't want to cheat. Let's just look at it live real quick.
You guys catch that?
I did not.
Oh, it's my cat.
Oh. Oh well, coming in for another win maybe. Okay.
Not the one. No, not the
Uh.
one with the 100% win rate. It's the other
Oh.
one.
Darn it. So we had a closure there and liquidity in this area, right? So you could just mark up this point of liquidity. Anywhere in there is fine. You can even get as deep up here as you want. You can mark it right there because you can even look at it as a zone with some of the liquidity covered so that you know when it breaks some liquidity. But you can create a zone with it because the idea is this whole area is liquidity. Anyway, okay, it comes up and visits that liquidity and then flips and closes below the point of liquidation right here. So at this point, you're free to go bearish, whether you want to do it as a market order or whatever, or a limit order. If you do a limit order, I don't know if we get a catch there. Let's see. Um, but whether it be market limit
Where's
order,
your liquidation zone? Sorry.
uh, right here. Point of,
Yeah,
wait. Here's the lowest. So you have to look at the highest point and the last point of right there.
yeah, yep. Gotcha.
So yep, be right there. Market order can get right in that. Limit order. So you do it on the candle close. The next candle does look like it barely tags you, and you just have to be quick with your limit, because it does, like that candle right
Mm,
there, does cover it. So I don't know. As a technicality, you should be in this trade for all intents and purposes for both. But if you're not quick enough on your limit entry right at that candle close, you have potential of having missed this trade as a limit entry order. But anyway, and then I like to, same as my normal strategy, just target nearby liquidity if there's enough R reward. And right here is a 2. This liquidation puts me near the 3. Um, 2 to 3 is fine for this. I've been looking for just about 3R. Actually, I've been setting it at 3R, so we can do that 3R and just take a look. But yeah, obviously that's a hit. But anyway, that was a win. I didn't get it though, but it was just a valid win with the strategy, basically.
mm.
And it's really that simple for
Have
anyone that
you?
does want to
Yeah.
demo this or whatever on their own and see if they like it. I'm literally looking at the liquidity the same way I do in my normal system. I'm waiting for a breakout of the zone on NASDAQ or the Nikkei and a liquidation of a point. I want one close to the 50% line, like right around it is important to me. I mean, it can be further, but I don't want one like that's too close up here in the um, premium versus discount, like in the area,
Mm.
the premium of the direction you're going. I don't want that. But yeah, that's
Yeah,
pretty
it's
much.
definitely something that I think people should look into because definitely has some validity. Like I haven't put too much looking into it, but just going back over the last sort of 2 or 3 months, kind of going, oh yeah.
Yeah, it's for sure the market follows the trend of the breakout. At least into London, sometimes far into London, all the way up into the New York rollover. Um, but it's common. It's very common that happens. Now, where it pulls back to and where it takes off from is a little bit more arbitrary, and there's different kinds of trading systems for that. And I like the one I'm doing because it's the same as I always trade. But there's lots of ways to do it, and they just have slightly different probabilities. But the overall system of following that trend is very valid and happens a lot of the time, a vast majority of the time. I'm still impatiently waiting for this to get liquidated here. If I pull back, but
It's ridiculous, isn't it?
yeah.
So at this point now, you would you if this low was going to get liquidated, would you be taking a trade off that, or would you then wait for more confirmation now because of the consolidation?
So I need it to create a point of liquidation, which as of right now is right here. I don't like that's pretty high, but I'll take it because the
Yeah,
market would pull back. I need that to get closed above for me to count this. I would not be
right.
surprised and also very much thirsty for this to get liquidated because that gives me a strong liquidation and then a flip. But still confirmation. I still need confirmation after that liquidation. If that's the case, it could tell me that we're continuing this 4 hour trend, and I can maybe target this liquidity right here, which is I would love to target that. And I need something chunky like this liquidation to make it valid for me to target that. Because if I get in on this and I get confirmation, I'd be nervous about targeting that high depending on my entry. But if I can get this liquidated and all this liquidity get taken out finally, I'm way more confident about that entry. I might still take it anyway from down here. It just depends. But I'm just more confident
Mm,
about it if I can get this liquidated. As if I have any say, if I can get this liquidated. If uh if we can see a liquidation down here into this, that's what I would really love. This is the most ideal trade scenario for me. Is
mm, yeah.
boom, probably a little stall there for a second, and then just like ridiculous. This is what it should look like, guys, in like a real market. Maybe a pause here for a second again, and then more
I don't know whether
violence.
it should exactly
I mean,
like
not
that, but
exactly, but I'm just saying like
yeah.
it should not look like whatever, the messy up and down crap we're going through right now.
Yeah.
Yeah.
Intention.
Yeah.
Intention.
Yeah, we need
It's definitely look
intentionality
like it's
with
got
that
intention.
liquidity. Yeah. This is to me this isn't the intentionality of building the liquidity so that that market maker can I
Yeah.
mean this makes me really feel like this is
Yeah.
gonna get liquidated. That's a lot of liquidity to just boom, it's gonna try to
Yeah.
everyone is sitting there going, "Oh, I'm safe." Their heart was pounding when the market came down here, and now they're like, "Oh, look at that. I'm safe." Oh no, no, no. So everyone's emotions are in the mix right now. Everybody that like
Oh yeah.
looks at the market. And so I really would not be surprised if we're getting this liquidated too, because all their emotions are in. They're gonna get
Hmm.
terrified. We're gonna have a lot of closed orders, some flooding of the market for a quick second. This is way higher than this real liquidity right here. So I don't know. I'm I'm really loving the idea of the market coming down into here at least, for anyone that's curious. This is like the bare minimum for like a juicy, big, chunky trade.
Yeah.
Ideally up here. This is what I would love to target, and I really want to see that liquidation for that.
Um, Oink. No special reason, just looking at price and where it possibly fits. Okay.
Okay.
If you like, you know, looking at differences in currency pairs, then Jay has put up a really awesome currency ETFs. Share my screen,
Okay, let me go
Jezza.
here. Yep. Okay, back up.
As you can see here, the caveat would be that you do need a paid version of TradingView, but as you can see here, let me just take these off. This is the currency strength of all the Australian currencies. This is the strength of all the Canadian currencies. This is the euro. This is the Swiss, the pound, the yen, the New Zealand dollar, and the American dollar. So you can look at these things, in the sense that, you can find, okay, well, the US is in a pretty deep discount sort of area. We've just had some sort of liquidity swap there. And then maybe I would like to find a currency that is looking like it's getting towards the end of its bullish move, and maybe want to be taking a pullback. Maybe Aussie dollar might be looking like that. No, not no. No, maybe we might be getting a pullback on New Zealand dollar. So then, therefore, you'd go, okay, let's have a look at NZD USD and see whether there's something
Mm-hmm.
that oh, look at that. Maybe there's some sort of trade that we can get into on that. When we sort of take the two pairs away from each other and look at, okay, well, the USD looks like it should be getting some strength. New Zealand dollar should be looking like it's getting some weakness. Pair them together, and we get a pair that possibly we can trade for a little while.
Mm-hmm.
But yeah, you can download this ETF. You go in onto our website, TTF. It's under fundamentals, and I think it's the second or third uh, video on under fundamentals. If you go underneath the video, there's a playlist, a what's this called? A list,
It's
the
like
list.
a yeah, white list or something like that, or watch list.
Yeah,
Watch list.
a watch list. There you go.
Yeah.
That's it. You got it. And it will show you all the different currency pairs. They do have a free version, but I don't find it as good because it does leave out a chunk of.
Mm-hmm.
Um, I don't think I even have it anymore. No, I don't.
Oh, oh
It only
well.
takes into account the US time, so it doesn't take into like Asia and London time zone. I think it's only active for like 8 hours a day. So yeah. Oh, it's 5 past 8. 5 past.
Yep, yep.
We've gone over. So,
Any final
do we have
questions?
any questions before we? No special reason. No, it's the same question. All right. Well, do you have anything else to add? Any exciting things that you want to talk about?
No, really not. I would love to see that area liquidated. So anybody that catches any kind of concept off of a liquidation of that point, tag us in the.
It's not gonna. It's not gonna happen.
No, it's gonna stay here all night.
This is
Uh,
this is your stereotypical bear stream from
yeah,
3 years ago.
and
This is just it's
I'm
just
going to
not going to
bed in
happen.
an
It's just going
hour.
to
So
consolidate.
if this is what it
Oh
is,
yeah,
I'm
the
not getting
same
this trade.
actually. It's
Yeah,
it's 8 p.m. here. There's no way I'm getting into a trade at this time. So
this is a good lesson for all you newbies out there. Don't work for the market. Let the market work for you. It's okay to miss out on an opportunity, or if the market is not agreeing with your
yeah,
session, there'll be more opportunities in the future.
absolutely. And I said it maybe a couple of weeks ago, 3 weeks ago or so. Like just being on a stream or sitting at the desk and just like being patient. That just it gets in the reps, because like if I had not sat in on Bear's stream where he had been streaming for 3 hours and talked about anything but trading because price was doing absolutely nothing, then I may not have had the patience that I do have today. If I had sat in on I don't know, a 1 minute scalping live session, then I might not be as successful as I am.
That's yeah, it's little tiny impactful things, man. It's crazy.
Hmm. Get those
That's
reps in.
yep. All right, guys. I hope you learned some things and enjoyed your time. Thank y'all.
Cheers, Jezza.
Cheers.